Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tfs Financial Corporation quarterly report. Tfs Financial Corporation provides a wide range of retail consumer banking services to its customers in the United States. At the heart of these services are deposit products, which include savings accounts, money market accounts, checking accounts, individual retirement accounts, and other qualified plan accounts. The company also offers certificates of deposit for those looking to save their money over a fixed period. In addition to deposit products, Tfs Financial Corporation provides various types of mortgage loans, including residential real estate mortgage loans, residential construction loans, purchase mortgages, home equity loans, and lines of credit. These loan options cater to the diverse needs of its customers, from purchasing or refinancing homes to tapping into their existing property's value. The company also offers specialized services such as escrow and settlement services, which help facilitate smooth transactions for its customers. With a rich history dating back to 1938, Tfs Financial Corporation has established itself as a trusted provider of banking services in the United States. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to increase. The stock price of a company like Tfs Financial Corp can be influenced by various factors that contribute to its overall financial health and performance. One key factor is the company's ability to generate consistent revenue growth, which can attract investors and drive up demand for the stock. Another significant factor is the company's profitability, measured by metrics such as earnings per share, EPS, and return on equity, ROE. When a company demonstrates strong profitability, it sends a signal to investors that their investment is likely to yield returns. This can lead to increased investor confidence and higher stock prices. Additionally, changes in industry trends or market conditions can also impact the stock price of Tfs Financial Corp. For instance, if the banking sector as a whole experiences growth, investors may become more optimistic about the prospects for individual banks like Tfs Financial Corp., driving up their stock prices. Furthermore, company-specific announcements such as mergers and acquisitions, dividend payments, or strategic partnerships can also influence investor sentiment and drive up the stock price. These events demonstrate to investors that the company is taking proactive steps to grow its business and create value for shareholders. Lastly, external factors like economic growth, interest rates, and regulatory changes can also impact the stock price of Tfs Financial Corp. For example, a strong economy with low unemployment and rising GDP can lead to increased consumer spending and borrowing, benefiting banks like Tfs Financial Corp. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key financial metrics. On the growth side, net interest income increased by $10 million, driven by higher interest income on loans and an increase in average balance of loans. Additionally, sales of REO, interchange income, and other transaction-based service fees contributed to revenue growth. The average yield on loans also saw a significant increase, resulting in higher interest income. On the decline side, non-interest income decreased by $2 million due to lower loan originations and principal repayments on loans held for sale. Furthermore, net gain on sales of loans declined, and other net losses increased. Mortgage loans held for sale also decreased, contributing to revenue decline. It is worth noting that some areas remain neutral, including interest expense, which saw a decrease in both 2024 and 2025. However, income tax expense increased due to higher non-deductible compensation and effective income tax rates in certain states. Overall, the primary drivers of revenue growth or decline are largely tied to net interest income, loan originations, and sales of loans. Net income decline. A slight dip in earnings. The extracted summaries reveal a slight decline in net income from $22,426,000 in 2024 to $22,274,000 in 2025. This decrease of $152,000 represents a mere 0.7% drop. Despite this minor dip, the overall trend suggests stability rather than significant change. Profit margins on the rise. In contrast, profit margins show an upward trend. Net interest income margin increased from 36.6% in 2024 to 38.8% in 2025, while non-interest income margin rose from 3.5% to 4.1%. However, the effective tax rate did increase to 21.8% in 2025 from 21% in 2024, which may have contributed to the slight decline in net income. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the provided information, the operating cash flow has turned positive, marking a notable shift from previous years. This is evident on page 14 of the report, where it is stated that the operating cash flow stands at $15,702,905, $34,651. This positive development suggests that the company's efforts to optimize its operations and manage costs have been successful in generating sufficient cash to cover its expenses. The fact that the operating cash flow has become positive indicates a strong foundation for future growth and stability. The company's debt level and interest expenses have undergone some fluctuations over the past period. Initially, there was a slight increase in total borrowings from $4,923,978 to $4,939,835. However, this trend is not consistent across all reports, with one report indicating a decrease of 3% in interest expense on page 7. The average balance of borrowed funds also increased by 3.7%, but the overall debt level remains relatively stable. In terms of interest expenses, there are mixed signals. While some reports indicate an increase, such as a 3.1% rise to $122.1 million, others suggest a decrease. For instance, page 57 shows a decrease in total interest expenses from $118,440 to $122,092. The lack of explicit statements on interest expenses in certain reports makes it challenging to determine the overall trend. Overall, while there are some fluctuations in debt level and interest expenses, they do not appear to be significant changes. The company seems to have managed its debt and interest expenses effectively, with no major concerns raised in most reports. Management's outlook for the company is optimistic, with a focus on maintaining liquidity and balance sheet health. They expect to fund commitments through normal operations and believe that resolution of legal actions will not have a material adverse effect on the company's financial condition. To reduce concentration in specific states, management plans to engage in direct marketing efforts and lending activities in other states. The company aims to remain well capitalized with a Tier 1 leverage capital ratio above 5% and maintain a minimum liquidity ratio of 5%. Management is also focused on controlling operating expenses to offset margin compression and has sufficient liquidity to meet short and long-term needs. Additionally, they are actively marketing home equity lines of credit as a strategy to manage interest rate risk. Overall, management's strategy is centered around maintaining financial stability, reducing concentration in specific states, and managing interest rate risk through targeted lending activities. The company has made several acquisitions and divestitures in the mortgage loan market. In terms of acquisitions, the company has committed to purchasing $38,457 worth of mortgage loans by December 31, 2025, and $28,460 worth by September 30, 2025. Additionally, the company holds a significant portfolio of mortgage loans for investment, totaling $15,655,159, as well as other loans valued at $8,153. The company has also made commitments to sell mortgage loans, with amounts totaling $11,298 by December 31, 2025, and $59,340 by September 30, 2025. Furthermore, the company selectively sells a portion of its long-term, fixed-rate mortgage loans in the secondary market. Specifically, the company has sold or committed to sell $109.6 million worth of agency-compliant, long-term fixed-rate mortgage loans to Fannie Mae on a servicing retained basis. The company has a history of distributing wealth to its shareholders through dividends and share buybacks. In terms of dividends, the company has consistently paid out significant amounts each year, with payments totaling $15,112 in 2025 and $14,897 in 2024. Additionally, a one-time cash dividend payment of $65 million was made in December 2025. The company's share buyback program is also notable. Although there were no specific details provided on the number of shares bought back or the total amount spent, it is clear that the company has engaged in strategic stock repurchases in the past. In fact, a total of $1.9 million was spent buying back 139,442 shares at an average cost of $13.66 per share. Furthermore, up to 10 million shares are authorized under an ongoing program, indicating a commitment to continuing this practice in the future. That concludes the financial summary for TFS Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.